Don't try to start trading in 2025. It costs way too much money. It is way too hard to learn. Instead, I'm going to teach you a way that I like to call systematic trading that you can implement within the next 90 days that you can learn. And all you have to do is really follow one system, one model, one time and price, and it all works out off of that. So I'm just going to get into this just a little bit here. I'm going to show you guys some examples as well. But the biggest thing that why I say don't start trading in 2025 is because you need to be following a very strict model, right? The old way of trading. The old way of trading is you follow a random setup. You follow a random time in price and your RR is very mixed. Now what I mean by this is a random setup. You see a sweep of a low, price is bullish, and immediately you enter off the first random inversion fair value gap that there is, and you go long off of that, right? You either get lucky and price plays out all the way to the opposing buy side liquidity, or you get the bad luck of the draw and you get stopped out because you're not following one system, right? Random time. Random time in price. You're entering at market open. You're entering at 11:30 a.m. Eastern. You're entering at 4:30 p.m. Eastern. You are entering at random times that don't align time with price. This is also why you're not following a system. When you follow a system, you are very consistent. You only do what this system tells you to do when it shows up, right? Also, a mixed RR. When you're not trading a system, you're trading, it could be a 1 RR one day. You could have a 3 RR another day, and then one day might even be a unrealistic 10 RR, and then boom, you can go on a losing streak, right? When you lose, you're following a consistent losing streak, such as 1 RR, 1 RR, 1 RR, right? But when you win, it's very unbalanced. Let's say one day you take a win and you have a 1 RR. The next day, you lose a few trades in a row, and then you're hoping to get a 3 RR the next day. Biggest thing in trading is consistency and sticking to something and being disciplined, right? It's the same thing with an RR. Over time, you want data to be able to tell you you are consistent, but in order to do this, you must follow a consistent RR, right? This is how the new way of trading is different. The new way of trading, like I like to call it, the Z-Trade systematic system, the one way you should be trading is one setup. Whether that be, for me personally, let's just say we have a sweep of a low, and I'm going to show you examples like I said. We have a sweep of a low. We have a market structure shift in the opposing direction going bullish. We have a fair value gap with a breaker left behind, and you go long off of that, right? One system. If you want to be consistent with your data, you need to follow one system, right? You can't be entering long one day off an inverse fair value gap, the next day off a change in the state, the day after that off a random inversion where you don't even know where price is going, right? One setup. Listen to that. It's a system. If you were to think of a system, what is a system? What is a system in a business? A system is something that is followed and doesn't break its path, right? Imagine a business is flowing consistently. If they change one thing, the business goes down, it starts losing, and it's not generating what it should be, right? It's the same thing with trading. Trading is a business. Why would you have a working system, see it literally handed right in front of you in a silver platter like I am right now, and then boom, the next day you follow something different? What's the point? What is the point? So, same thing. One time and price. Me personally, with this system, I'm very, 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 very strict with time. Time must align. I'm a firm believer of that. Whether that be the first AM macro at 9:45 a.m. Eastern to 10:15 a.m. Eastern, or the second AM macro from 10:45 a.m. Eastern to 11:15 a.m. Eastern. Anything outside of that, I do not trade. I don't care if it's a beautiful setup. I don't care if it's my setup from this system, this systematic way of trading. The system doesn't work unless you align time with price, right? Why would you not follow the system? If the system's telling you you see success and the data literally backs it, why would you go against the system? Next thing is one singular market. If you have success in this system trading NASDAQ futures, why would you go over and trade gold futures when the system and the data literally tells you it works with this? Obviously, strategies work with multiple markets, but when the data, the consistent data from this one setup, from this one time and price is telling you it works in this one market, why would you go against that? It's like someone telling you, hey, you can make $1,000 every single day if you follow this one system, you follow this one model, you follow this one time in a price, you wait for this one time to show up, and you only trade when this one thing shows up in the market. And if you do, you'll make $1,000, not every single day, but you'll make $1,000 when this shows up and a high probability setup forms. But they also tell you if you go against that, that's where you lose $1,000, right? When you take a random inverse fair value gap where it is 11:45 a.m. Eastern, time's not aligned. When it's a random model, it is you're trading soybean futures, oil futures, it's just stuff like that, right? So why would you go against the data? Next thing, stable RR. Like I said, when you have a mixed RR, it's a little different because you're not following consistency. One day you can have 1 RR, one day you can have a 3 RR, and then you go on a losing streak, and then you have another 1 RR, 1 RR, 1 RR, and then over time you might not actually be profitable, right? Whereas with this system, you are following one strict RR. And I'll show you exactly what this is, but I'll just like base it off of this right now. When with this system, you tend to follow a 2 RR or the liquidity that is very near a 2 RR. Any more than that, you do not take, right? So I'm going to follow into these steps, and this works. It works for me. It works for all my students personally who do this, and it works for everyone that I've taught this to. It's one system. This is systematic trading. You need to stop trading and follow a system for trading in 2025. That's what I've been touching on this whole video. So the 10K month systematic trading playbook, I'm just going to give this to you straight up. Ignore the K right there, I didn't spell right. But step one, find a market. The system that works for me is trading NASDAQ futures. I'm not going to do anything outside of that. Why would I? Why would I risk my capital when my data says NASDAQ futures is where I'm at? Why would I go to soybean futures, gold futures, when I don't know what my data is behind that? I'm answering blindly. It's stupid. I know you guys might be like, oh, but the setup formed. Still, the biggest thing is risk management and just knowing that you shouldn't be in that. It's all mentality. When you know you shouldn't, don't do it. It's not worth it, guys. Even if the setup looks nice, even if you're itching just to enter a trade, don't do it. Step number 2, follow this one model that I teach you. I'm going to show you an example after this and cut the video and be very quick because I want you guys to be able to learn, because I know your attention spans suck. But follow the one model I teach you. It's super simple. It doesn't show up every single day. It might show up a few times a week, 4 times a week, 5 times a week, or 1 to 2 times a week. You can't enter the week saying, oh, I'm going to take 4 or 5 trades this week. One thing you need to lock in mentally is you take a trade when your setup forms. If it doesn't form, you walk away, you skedaddle, right? Step number 3, trade only when time allows. If you have let's just say you have PMI news at 10 a.m. Eastern. The macro opens at 9:45 a.m. Eastern. You are going to wait for news to pass. At 10:01, you can look for a trade. Once it closes at 10:15, you are done until the second AM macro at 10:45 to 11:15 a.m. Eastern, right? Now let's say news was pre-market, everything passed. It was at 8:30 a.m. Eastern. Once that macro opens at 9:45 a.m. Eastern, you are looking for a trade. 9:45, let's just say you find an entry, you take it, boom, win, beautiful, pat yourself on the back, you did a good job. Now, let's just say 9:45 goes, 10:14 hits, 10:15 hits, and you think a setup is forming. Nope, you're done. You're hopping off, and you will take a 30-minute break until the next macro, whether that be sitting down, listening to music, talking to your friends until it opens, whether that be going to get some food, going to get a coffee, doing whatever you want until the next macro opens. 10:45 a.m. to 11:15 a.m. Eastern, you do the exact same thing. With this systematic approach to trading, you are a robot. You only do what you have. Let's just say you have it written on paper. You only do whatever this paper says, whatever the system says you do. If you break that system, so be it. It's your fault. If you follow the system, you will have a high probability setup. Step number 4, scale with prop firms. Whether you're using a prop firm or a live account, the whole point is you attain capital using this system. You get payouts using this system. If you follow it, you will see success. If you don't, like I said, that's on you. So I'm going to show you an example from today. This was live in my Discord. I'm going to show you exactly this perfect example right here, and why this system, I think it's 4 steps. 4 steps in this system, and you will see success. Excuse what I just said. Step number 1, and I'm going to write this all down. So here, actually, you know what? I will make this very, very clean for you. Step number 1 in the actual model. You are going to look for key liquidity. I'm just gonna write it that. Key liquidity levels. We'll just call it that. Step number 2. Let's just say you sweep out a key liquidity level. You're gonna look for a short-term low or a short-term high sweep. Step number 3. I'm gonna have to move this for sure. Step number 3 is displacement. Here, I'll write that for you. Displacement plus fair value gap. Step number 4 is 2RR near liquidity. No, liquidity. No, I missed it. There we go. Okay. Step number 1. I'll go back in time right here just so it's a little cleaner. Like I said, step number 1 is key liquidity. So what am I looking for? I'm looking for 4-hour, I'm looking for daily, I'm looking for hourly liquidity. When we come into market open, this was today, price pushes all the way down and sweeps out this liquidity. So what I'm looking for, I say, Xander, can I see this going any lower? Do we have any liquidity zones lower that'll keep us from going higher? No. We sweep out this liquidity. Where is the rest of the liquidity? Sure, you can say that we can push all the way down. No, we're probably not. Look how far we are. Let's just say we're down there. We are currently about 2,500 ticks away from this liquidity level. I would not consider that something I take, right? So why did that just move like that? Excuse that. Okay, that was step number 1. We took out what I like to call our sell side objective, right? When we take that out, there's nothing to go lower. So this is where I look for longs. We take that out, I want to go higher. Step number 2, short-term low, short-term high sweep. So what do? We sweep out our low, our key liquidity level, and we end up putting a low there. That price pushes up. Everyone's like, oh, long. And then they get stopped out, right? Because there's a short-term low there. This is where the move happens. They get stopped out, and then the actual move happens. So there's our sweep of our short-term low. And then what do we get? We get a nice push above this high with heavy displacement. That's step number 3 with a fair value gap. You see this one candle right here? This one candle was, let's see, about 134 ticks. That's beautiful. That is beautiful displacement. What is step number 4? I want you guys to screenshot this because I'm going to delete it. 2RR near liquidity. So what do? I prefer to target a 2RR just because the whole system, you need to stay consistent. But what do I see? I see we have a key liquidity level right here from, what is this? 9:44 a.m. this morning. So I'm going to put my TP there. Obviously, this is hindsight, but this was live in my Discord. You guys saw everything that was taken as far as this. And what do we have? Like I said, we have this high right here. I might take a 2RR if I'm a trader that takes partials. If you're a trader that wants to put in your system partials, take a 2RR partials. Beautiful. Look, if you have a 2RR right there, you see price wicks that, gives a nice reaction down, and then goes back up to our end of trade draw, our TP, right? This is how it ended up playing out. So I'm going to go back to here. Ooh, too much. All right, so guys, everything I've just covered, every little thing, it all comes down to following a system, right? You don't follow a random setup that forms in the market. You're going to get stopped out. You don't trade within a random time and price. What is the point? If the data tells you trade with a certain time, you're going to follow the data. If you don't, you're just oblivious and you're stupid. Mixed RR, do not follow a mixed RR. One day you'll have a 1, one day you'll have a 3, one day you're just going a losing streak and then you'll fumble, right? Like I said, the new way of trading is the systematic way of trading, the way I trade, the way I've backed all my data with me and my students, and we've seen success, right? It is one setup, one time and price, one market, and we follow a stable RR. So guys, I'm going to end the video here. I just gave you an entire playbook that I want you guys to follow, an exact model for you to follow too. You can literally pick everything off of here and become profitable. Work on your mentality, stay consistent, and you guys will see wins in the market.